News Radio 700 WLW.
Here to discuss holiday spending. People are predicting it's down. The stock market's been down a little bit here lately. To discuss what exactly is going on is the guy we love to talk to. He's our financial strategist. He's the president of Cotton Wealth Management Associates. He is our good friend, Steve Cotton. Steve, how we doing?
We are just doing great. Eddie and Rocky, glad to be with you today.
So, Steve, how are we looking? Here we are, we're almost exactly 5 weeks out from Christmas. How are we looking? How are we feeling about it?
Well, there are several things that I think about this, and I just came from a briefing with the vice chairman of the Federal Reserve Board here in Dallas, and we looked at all kinds of statistics nationally and in Texas and all over the country. And while consumer sentiment is moderating and consumer sentiment, spending sentiment is moderating and getting a little softer, guys, I have a theory that people have been under a lot of stress this year, and that we're moving into a time when family is more important than ever. And I think because of the downturn in energy prices and maybe a little bit better affordability on airfares, and now with the lifting of the government closure, airlines easing up, I think people are going to travel more than you think. And I think we're going to spend into Christmas a little more opportunistically than you think. And I think don't underestimate the strength and the durability of the American economy and the American family.
Okay, so you're thinking most part will be, would you say similar to last year, better or worse?
I think it will be similar to last year, and it may even surprise you to hear me say it may be a tad stronger.
Wow.
I don't think that the statistics we're seeing now are necessarily indicative of what we're going to see heading into Christmas. I think it's going to be better than people think.
Steve Cotton is our guest, financial strategist. And Steve, and these things, the stock market is so cyclical. There's been a recent kind of downturn in it. Is that just natural cycle? What are we looking at?
We're looking at profit taking. Some investors have felt like the stock market was overvalued and due for a correction, and they wanted to get ahead of that by taking profits off the table, which they did, which of course lowers the market. Other people see this as a tremendous buying opportunity. Good quality companies have been on sale. Now, the two of the three market, the S&P and the NASDAQ, are back up positive. The Dow 30 is down a little bit today, but I think what we saw in the last 2 days really was profit taking and just hedging the downside.
Steve, what are you seeing? What's your thoughts on the tariffs? Now, look, in theory, I believed in the tariff. Look, I don't think there's no denying that the U.S. was getting screwed when it came to what other countries were doing with tariffs on our goods, right? There's the reason why you go to Japan, you don't see Ford trucks and all that sort of thing. So in theory, I agreed with the tariffs. What's your thought on them? Because they haven't exactly sprung results. That doesn't mean that they won't. And I know some have been relaxed a little bit. Just give us your thoughts on that moving forward.
Well, you ask a good question. The tariff story is a mixed story, and it's very complex. Let me give you an example. If I go to the liquor store and I want to buy my favorite Irish whiskey, and I find that it's now $98 a bottle, then I'll pivot and I'll buy a good Kentucky whiskey instead at $48 a bottle. So I switch products. The American people do the same thing. Now, there are some areas, Trump put a 50% tariff on copper. We have to import about 50% of our copper in this country. Copper is used in new home construction, everything. And that kind of a tariff is going to be inflationary. But tariffs are not necessarily automatically inflationary. It depends on the commodity, depends on the country, depends on the elasticity of demand and supply, depends on a lot of things. Right now, the tariffs in general have not been inflationary, which I think surprises the analysts. What it'll look like going into 2026 is anybody's guess. But if Trump manages to push down foreign tariffs on our goods and services and eliminate some of the non-tariff barriers to our entry into their markets, that is going to be a huge positive for the American economy in 26 and 27.
And that's what we're going to ask you, Steve. I wanted to ask you is, okay, here we are obviously getting towards the end of the fourth quarter. What do you see for next year in general? It sounds like you're very optimistic.
I am very cautiously positive, and I'll tell you why. Because the Congress has reauthorized the Trump 2017 tax cuts and expanded it with no tax on tips, no tax on overtime. I think people are getting something like a $4,000 tax credit for their Social Security income. They weren't able to make Social Security income tax-free, so the compromise was, well, let's give somebody, let's give people below a certain income level at least a tax credit. That will be helpful. The Fed is going to continue to cut interest rates, I think, very strong, very powerful. 30-year mortgage rates are going to continue to dip down. That's going to be positive. There is so much positive, and that's even before we get to these Trump trade deals, like the $1 trillion deal that he announced with Saudi Arabia at the White House yesterday. We're going to have such wind at our backs over the next 5 years. I really think that we're going to have a very strong economy, and the markets will reflect that. So if you can buy at these lower rates as an investor, I would do so.
Steve Cotton is our guest. And Steve, what's your forecast or thought on the effect of or the impact of AI on the economy? Because on one hand, you hear a lot of horror stories that AI is replacing a lot of jobs and it's a big thing, but I don't know. I feel like it's not going to come as fast as we may think it's going to come. What's your thoughts?
I think you're right. I think that too is going to be a mixed story. I think there will be the insurance industry, or the accounting industry rather, thinks that AI is going to be tremendously helpful to their financial analysis work. I know in my own case as a financial advisor, I now use an app called Jump AI, and it has taken the time it takes me to put notes in my record keeping after a client meeting, has taken it from an hour to 7 minutes.
Wow.
A tremendous increase in efficiency. There will be other areas where AI will cost us jobs. There will be other areas where AI will create new types of jobs. But I think overall it's going to be a help. There will be bad actors that misuse it. The cyber criminals will misuse it. The crooks and the scammers will misuse it. So I think it'll be a mixed bag. But I think on balance, if it helps us analyze potential drug therapies more quickly, that could be a huge help for public health. So it'll be a mixed story, and it's just like the internet, some good, some bad. You won't know until we're 5 or 10 years out.
Yeah, I just feel like kind of like the .com bubble. Everyone thought, if you made a website that was going to save your business. Well, not necessarily, and that kind of created a bubble. And just like that, if you have a failing business, all the AI in the world isn't going to help you out if you're not doing things right. So it's not some universal fix, in my opinion.
Yeah, well, every time we've had any kind of technological evolution, there are winners and losers, and don't underestimate the winners. When the Henry Ford started putting Model Ts on the roads, the buggy equipment manufacturers went out of business. We lost those jobs, but we created a new auto industry. There are all kinds of stories like that, but AI is going to enable us to do more analysis more quickly. It's already had tremendous applications in the defense arena, and a company that you never heard of a year ago, Palantir, is now one of the stars in the AI world, and that's all because they do pattern recognition. So I think it'll be a mixed bag, but there will be bad that will come along with the good, just like in all technological changes.
All right. Well, that's Steve Cotton. We will let you go, buddy. It is always our pleasure. Thanks so much for stepping in today. People want to find out more about you. Where can they go?
Well, we have a website, Cotton, COTTONWMA.com, Cotton WMA. We have clients all over the country and all over the world. We just like helping people and doing it with strong ethics, and a stewardship model. That's who we are.
Steve, thanks so much, buddy.
Okay, glad to be with you.
Thanks, Steve.
Steve Cotton, our financial guy.